The Securities Industry and Financial Markets Association, SIFMA as it's also known, it's holding its 14th annual Fixed Income Legal and Compliance Conference. It's today in New York. And Lynette Hotchkiss is the executive director of the Municipal Securities Rulemaking Board. She took part in today's conference, focusing on current issues in the municipal market. She joined us now with her insight into the industry and to the regulation. As I mentioned, we'll keep Brian with us to also participate in the conversation. Thanks very much for joining us, Lynette. Appreciate it.
Thank you.
So, first of all, let's talk about sort of the uniqueness of what it is you do as a self-regulating body versus other parts of the financial industry. Do you think that self-regulation has been successful when you're talking about the muni market?
Oh, absolutely. In fact, the SEC has even acknowledged that the expertise, the self-funding, and the ability to focus specifically on a particular market or market segment is a very useful rationale for keeping the self-regulatory structure in place in the overall financial regulatory framework.
What about some of the incidents we've seen in the muni market over the past year where you've had them getting into areas where they previously weren't, derivatives markets, interest rate swaps, things like this, that damaged a lot of municipalities? What is your regulatory body's role, I should say, in trying to prevent that, and why wasn't that kind of investment prevented?
Certainly. The MSRB was created in 1975, certainly before the municipal derivatives market even existed. So regulating derivatives is outside of our jurisdiction, and in fact it's outside of generally the regulatory framework, and we're seeing the SEC and the CFTC talk about what the overall derivatives regulatory framework for the derivatives market should look like. But what the MSRB did is to insist and really make it very prominently known that whatever broad regulatory framework is developed for the derivatives market, that the municipal derivatives market should absolutely be part and parcel of that. And then as well, we have called for the regulation of swap advisors. And these are independent, non-regulated entities that provide advice to state and local governments. And they are not regulated, so there is no professional qualification exam or no prohibition on political contributions. So it's very important that we get these parties regulated.
Now, focusing on the secondary market, the tradable market, where a lot of the retail investors, mom and pops that buy these bonds, that want to capture that tax-exempt yield, they have to buy it, but they also have to buy it through the broker-dealers, and they charge a much higher difference in yield versus what the municipalities actually have to pay. And oftentimes you see between the small investor that's buying the municipal bonds and what the actual municipality actually has to pay is a large difference. What are you doing to compress that differential, to kind of take that away from the dealers, the big Wall Street banks, and into the mom and pop investors?
Certainly. Municipal retail investors have always been a big component of our marketplace. Fully 2/3 of all munis are owned by retail investors, either directly or through mutual funds. And we're even seeing increased participation from the retail sector. So what you've seen over the past 6 to 12 months is an increased use of retail order periods by municipal issuers. And many of these issuers will utilize television ads, radio ads, a full-scale marketing campaign to sell their municipal securities directly to the retail investor.
Right, but then you're not capturing that incremental yield, so that sometimes that is a large difference. Now, is there any way we can get that to a smaller level, and how would you measure it?
Certainly, the MSRB recently implemented its EMMA system, which is a free central database for trade data and municipal market disclosure documents. That's a huge key to retail investors. So for the trading activity that you're talking about, that's a powerful tool for FINRA and the bank regulators in ensuring that all trades of municipal securities are done in compliance with MSRB rules.
Okay, Lynette Hotchkiss, thanks a lot for coming in on a busy day, I know, for you. Thanks a lot.
Thank you.
We appreciate you joining us.